Hi guys, in this video I'm going to show you how you can easily increase your credit score to over 800 in the quickest and easiest ways possible. Contrary to what you might think, it's not actually that hard to dramatically increase your credit score within a relatively short period of time. Now make sure to watch the video all the way until the end so you have a complete understanding of everything you will need to know to reach a credit score of 800 or more. And with that being said, let's jump straight into it. So before I go over how to actually increase your credit score, it's really quite important to understand what actually determines your credit score. A commonly used metric is a FICO score, which is basically the same as your credit score. And this is comprised of 5 separate factors that ultimately make up your FICO score. The most influential and largest factor to be aware of is your payment history, which makes up 35% of your total FICO score. Then the second largest factor is amounts owed, which makes up 30% of your FICO score. Length of credit history accounts for 15%, then credit mix accounts for 10%, and finally, new credit also accounts for 10%. So let's break down these points to make more sense of what exactly they mean. Starting with payment history, which makes up 35% of your FICO score, basically this shows how you've actually paid off your accounts over the length of your credit history. And this is an extremely effective predictor of your ability to actually make payments on time and consistently, which is why it is one of the most important factors to consider with your own account. Simply put, always pay off any accounts owing as soon as possible to avoid any late fees and to keep your credit score happy. Accounting for 30% of your FICO score is amounts owed. And this is also an extremely important factor to be aware of if you want to have a high credit score. It simply comes down to how much money you owe on your credit card or how much debt you might be carrying. According to FICO research, the level of debt you carry is predictive of future credit performance. So it's best to try and keep the amount of debt you owe as low as possible, as using a large portion of your available credit will negatively affect your credit utilization ratio and therefore push your credit score down. And the reason having a large amount of debt can be seen as negative is that it can indicate to lenders and credit card issuers that you may be overextended and unable to make the required payments to keep your account in check. Now, length of credit history is another important factor that actually makes up 15% of your FICO score. Although it won't make or break your overall FICO score, it is still worth being aware of. Basically, it comes down to the following points. How long all of your credit accounts have been open. This will include your longest standing account and shortest standing account, and then the average of all of your accounts combined. And then finally, how often you use each account. Now, accounting for 10% of your FICO score is your credit mix. This basically takes into account different lines of credit that you might have. It can include credit cards, auto loans, student debt, or even a mortgage. Now, if you only have one line of credit such as a credit card, that is totally fine, and it shouldn't really impact your FICO score that much. So last but not least is new credit, which makes up 10% of your FICO score. This could be any new credit cards you have applied for over the past 12 months. And this can sometimes be a bit of a problem if you apply for too many credit cards in a short period of time. As credit card inquiries stay on your credit report for up to 2 years, applying for multiple credit cards in less than 12 months can actually lower your credit score, as it will basically lower the average age of your accounts. Now, one of the easiest and quickest ways to improve your credit score is to become an authorized user. And this isn't always possible for everyone, as you do actually need to know someone that has a good credit score and is willing to add you as an authorized user to their account. So for example, this could be a family member or a good friend. Now, it's important to know that if your friend or family member actually agrees to add you to their account, they, as the primary account holder, will then be legally responsible for all credit card repayments that are made to the card. And this can potentially be quite a risky endeavor for them. So a simple way around this would be to just have your name put on their account but not receive an actual credit card. This will avoid any issues for the primary account holder and still provide you with the benefit of being on their account. Now, as simple as this may sound, it is extremely important to make sure that the account that you are being added to actually has a good credit score, low credit utilization, and a good history of making payments on time. Now, if you do choose to become an authorized user, it is important that you contact the lender or credit card issuer to make sure that they will actually report all information regarding the credit card in use to all 3 of the major credit reporting agencies, which are Equifax, TransUnion, and Experian. This is imperative because if they don't report this information to the credit reporting agencies, your credit score won't improve at all. Now, another way of building up your credit score and establishing a good credit history is to get a secured credit card. This is particularly useful if you've been deemed as a high-risk borrower or have little to no credit history. So to actually get a secured credit card, the credit card issuer or lender will almost always require you to make a cash deposit, which can be anywhere from $200 all the way up to $5,000 or more. This money will then be placed into a savings account, and in return, the card issuer or lender will provide you with a similar credit limit to the amount that is placed into the savings account. Now, once you have a secure credit card organized, the best way to start building your credit score is to make sure that you always pay off your amount owing as soon as possible, and definitely before the due date of each month. If you do fail to make timely payments and max out the secure credit card, the credit card lender will basically just keep the initial deposit that was placed into the savings account. And needless to say, your credit score will most likely take a hit. Now, if you already have a credit card and don't need to become an authorized user or get a secured credit card, make sure that your credit utilization ratio stays as low as possible. Generally speaking, anything under 30% is considered pretty good, but if you can manage to keep your credit utilization ratio around 10 to 20%, this will be even better. As I mentioned at the start of this video, amounts owed accounts for 30% of your FICO score. So by keeping your credit utilization ratio nice and low, it is more than likely that it will result in a positive increase to your credit score. So one way I keep my credit utilization ratio extremely low is by constantly paying off any amount that is owing on my credit cards. And this has worked quite well for me, as my credit score has been over 800 now for the past 5 years. Now, the benefits of having a low credit utilization ratio are really quite valuable. The first and most obvious benefit is that your credit score will go up. Along with this, it will make it easier to acquire additional credit at lower rates for things such as credit cards, auto loans, or even a mortgage. And the reason for this is pretty straightforward. By having a low credit utilization ratio, potential lenders will be able to see that you are not under any immediate financial stress, and that you are actually managing your credit in a satisfactory way. So one thing that can negatively affect your credit score is making too many credit inquiries in a short period of time. And it's important to understand that there are actually two types of credit inquiries: a hard inquiry and a soft inquiry. An example of a soft inquiry would be checking your own credit score, or if you authorize a potential employer to check your credit report. In these two examples, as long as there is no new application for credit made, it will be a soft inquiry. Now, a hard inquiry is usually associated with getting a new line of credit, which could be anything from a mortgage, auto loan, or new credit card. Basically, a creditor will make a request to view your credit files so they can determine if you pose any risk to them as a borrower. Hard inquiries will show in your credit report for up to 2 years and can negatively affect your credit score in the short term, which is usually a few months. Now, another relatively easy way to potentially help boost your credit score is by checking your personal accounts and credit report for any errors that may have been made. This could easily happen if your bank made a simple mistake, or if a credit card scammer managed to find and use your information. An easy way to check for this is to always go over your billing statements on a weekly basis to make sure there are no unusual charges that have been made to your account. If you do happen to see anything out of the normal, simply notify your card issuer as soon as possible, and they should help you to resolve the issue relatively quickly. Now, in terms of checking up on your credit report, the website annualcreditreport.com is a great place to start, as it is free to use and is authorized by federal law. Basically, they gather information from all 3 major credit bureaus and also have access to a large database of your credit use. Now, if you do find any errors on your credit report, it is possible to dispute them. This can be done by contacting any of the 3 credit bureaus by phone or by sending them a letter. And I've left a link to each of the 3 credit bureau dispute pages in the description below. Now, another possible way to help increase your credit score is to apply for a credit limit increase. And what this does is effectively increase the amount of available credit that you have on your credit card, which will then usually lower your credit utilization ratio, which, as I mentioned before, is a factor in determining what your credit score is. And if you want to learn how to get a credit limit increase, check out this video here. Now, if you do choose to get a credit limit increase, it is extremely important to be mindful of staying on top of your payments and still aiming to keep your credit utilization ratio below 30%. Just because you have access to more credit doesn't mean you should use all of it. And just remember that applying for a credit limit increase can result in a hard inquiry on your credit report, which may well negatively affect your credit score for a few months. It will also stay on your credit report for 2 years. So if you're thinking about applying for a mortgage or getting an auto loan, it's best to wait until you have been approved for either loan before applying for a credit limit increase. So that covers a few simple ways you can quite easily and effectively increase your credit score to 800 or above. And remember that having a good credit score is extremely important, as it really can make a huge difference to the amount of interest you pay on any borrowed money. So if you enjoyed this video, please make sure to click the like button and share it with a friend. Now, if you're relatively new to credit cards and don't want to make any common mistakes, I recommend that you check out this video here where I talk about common credit card mistakes that you should avoid.